Welcome back to a session that I think might be a little bit different to some of the sessions that you might have attended. So I'm chairing a session that I'm really desperate to find out more about, but frankly, I don't really know a great deal about. And so just to manage your expectations from the get-go, I think we're going to treat this as much as a bit of peer learning and information sharing, information gathering, as we are some expert presentations from the front. It's not to say our speakers today are not experts. They've been doing this work, thinking about this stuff for ages. But I think we all realize that this is a territory that is incredibly fast-moving. And also to manage our expectations, some of the contributions that we've got today are coming over the interwebs and will be on film. And we're going to be working with the worries of technology in a field with 4G that might not stand up, but I think it'll be all okay. So, yes, I'm Sue Pritchard, and I'm the Chief Exec of the Food Farming and Countryside Commission. And we're going to be talking today about understanding more about nature credits, natural capital. But my main purpose for wanting to convene this conversation is to make sure that this, what I keep hearing is the huge wall of private finance that's waiting to crowd into this market is both good for farmers and farmers of all size and scale and type of enterprise, as well as good for nature and climate. And at the moment, if I'm completely honest, I'm not super confident that the way things are going at the moment, we can say yes to both of those questions. So as I say, we're going to have some presentations from Professor David Hill from the Environment Bank, who is also one of my commissioners on the Food Farming Countryside Commission, so I benefit from his expertise all of the time. We're going to hear from Tom Stratton from the Duchy, who is, again, really steeped in thinking about this work for himself and his tenants. And we're going to get some presentations on the screens from Rich... oh, God, me and my names. Who was here yesterday and saw me forget names? Is it Stuart Thingy? Stuart Thingy. Rich Fitton of Finance Earth will be, at least he's not here, so he doesn't know I've just forgotten his name, so that's fine. Rich Fitton from Finance Earth is going to be speaking to us from a screen, and we've also got Helen Edmondson from DEFRA, who's going to be talking about how this all works in the policy context, and how DEFRA and indeed Treasury imagine this might all contribute to the big ambitious policy intentions that we're all talking about, here today and in many other places. So, without further ado, I'm going to let David kick off with his presentation. Kelvin, we have a PowerPoint ready. Excellent. Oh, it's all working beautifully. David, over to you.
Thank you, Sue. Is this? Yeah, it is on, right. Great. I'm going to be looking down into these corners. I need the prompts from the slides to crack on through this. Well, I think the timing now is fantastically exciting. But for a number of years, we've heard that there is a lot of money out there, but there aren't the projects to finance. I think some of that's true. I think there's a whole range of stories and narrative around why it isn't being freed up that easily, and it's a lot to do with the governance around this. So I set up the Environment Bank back in 2007 to bring the idea of biodiversity offsetting and gains from development to the policy position, and that's going to be put into law in planning law in September or October this year. So it's only taken 14 years, no more said. I don't know why it didn't take 4, but there we are. But that's where we are. So I'm going to try and talk something about natural capital credits. And on this slide, you don't need to look at the little text, but basically, the reason why this has become critical is that the risks to us have all gone green. So no longer are we necessarily talking about socio-economic impacts and even the threats of mass, I think there's something on there called weapons of mass destruction, we're actually talking about the two critical existential threats to us, which are all around nature. So climate resilience, climate change, and biodiversity loss. So the really good bit is that we've really come to understand that if we don't fix climate change, if we don't fix biodiversity loss, really, we don't really have a great future. And that's what's driving people quickly to look at where should we be investing money. And one of the things to invest money in is having a basic system of trades that can actually sell products to these new markets, which is what will really interest the landowner farmer farming sector. So we've got lots of words. You'll have seen the 25-year Environment Plan and the Environment Bill are about to be acted later this year. An ambition to restore 500,000 hectares of land for ecosystem benefits. Emphasis on nature recovery, so we're seeing the progression of a nature recovery network. And the clear fact to me is that we've got to have new approaches to funding, both in the private and public sector. And because 75% of the land in the UK is farmed, it's pretty clear that we've got to address those changes in the farmed environment. So we need to target the funding interventions into the farmed environment that can deliver large-scale things. And it's been calculated, I'm not sure I totally agree with this, it's probably a lot more than this, that an initial 650 million of capital funding a year is required to restore places to some form of better biodiversity quality, creating, by reference, 8,000 jobs. So the immediate nature-based classes that are really out there are biodiversity, so biodiversity net gain and corporate net gain. I'm going to talk about that a little bit towards the end, and I'm going to concentrate mostly on this biodiversity net gain piece because it's the most near market. Carbon, nutrients, natural capital stocks, and natural capital flows. For our money, we're looking at how we might stack biodiversity, carbon, and nutrients on the same land parcel, because if we can do that, we can generate significant revenues relatively quickly. But there are difficulties around understanding how to stack those to deliver additionality. Once we've cracked that, the market will open up very, very quickly, I think. So what we're doing at the Environment Bank is that we've managed to. I spent 14 years trying to lobby to get this thing in law, and now we've done it. We've attracted some fairly serious investors to back us to set up habitat banks across the UK with an initial fund of around £200 million, which is probably peanuts in the scheme of things, but it's a start. So we're going to look at setting up large-scale 40 to 100 hectare areas that we can restore biodiversity on. But I'm passionate about the fact that this is not a grant. When we work with farmers and landowners to set these places up, we want to do it in a commercial way, and we need to make nature economically visible. And the reason why biodiversity has been declining by 60% over the last 50 years is that we've treated it as a luxury and a charity case, and it absolutely is not. So I'm really keen that we see it as a commercial operation. Now, some people say to me, we don't like the commoditation of nature. That's not what we're talking about. It's actually making people understand that this has an absolute cost to us. If we get biodiversity to continue to decline, it has a cost to us. If it has a cost to us, it has a price. And if it has a price, it has a value. And that's the value chain that we're going along. So we work with delivery agents, so landowners, farmers, wildlife trusts, etc., to bring forward those land areas and raise conservation credits from that land that we then sell to developers for their compliance with the legal framework under the planning laws, as there will be towards the end of this year. And presently, the sort of habitat types that we look to create within the farmed landscape, so this is in association with the farming that goes on there, are wildflower meadows and grasslands, wood meadows, woodlands, wetlands, and some rewilded sites. And there's obviously, you'll have heard, there's a heck of a lot of interest in rewilding, but of course, somebody's got to pay for it. How do we do that? If we're going to do that, it needs to be paid for. So that's the sort of biodiversity net gain part of the story. If you look at the development sector, I think there's probably around 10,000 hectares of land gets developed every year, which probably means that we need around 4,000 hectares of land for biodiversity net gain. The government has, incredibly and brilliantly, I have to say, just announced that national infrastructure projects also have to do this. Now, that was excluded from the previous biodiversity net gain policy papers. Now infrastructure is included. That's great news for the landowner and farmer because they can get engaged in how to help deliver that and get paid to do so. But actually, the bigger market is in the corporate sector. So if you forget the developers, and often when you're setting up these development sites, they need to be within 20 kilometres of where development is taking place. The bigger market is if we can get the corporate sector to offset their impacts on nature and natural resources. And once we can do that, we would generate multiples on what the biodiversity net gain from development will be. And why should they do that? Well, if you imagine that 40% of global GDP intrinsically relies on what nature provides, then you realise that all corporates should take this really seriously. And they are definitely starting to do so. And that's, as Sue mentioned, that's why money is starting to come forwards. And the pressures for doing that come from fund managers. And they have a great role to play in making sure that corporates disclose their impacts on natural capital and reduce it where possible. And if they can't reduce it to zero, then they offset that residual by buying into management-based interventions on the land. And the reason why corporates will do that is it makes them more investable as entities. And so you'll see in the future, I think, laggards that fall away because they haven't dealt with this issue, and those that prosper will be the ones that take it into account. And we're already now starting to see a development of environmental markets to establish these capital assets and asset classes. So government really needs to stimulate this, and they could do that by requiring all corporates to report on their natural capital. So the natural capital disclosure is something that they could just require. And there is a task force looking at natural capital disclosure from corporates. We need metrics to enable us to do that, but that will come along in an association. We could also incentivise corporates. Why don't we look at taxation incentivization? It'd be a really good way of improving the situation. So the corporates would be required to purchase natural capital credits for assets such as woodlands, peatlands, wetlands, grasslands, etc. And not only would it improve the biodiversity of the land cover, but it would also improve our resilience to climate change. And you'll find then a market quickly develop, and that's where landowners and farmers can get into that market, provide the land that's required, get paid commercial value for it with a long-term revenue stream. And the corporates benefit because it gives them better corporate reporting. It de-risks their business and makes them a better investment prospect. The final slide here shows what I think we've really got to concentrate on now to get through that final barrier to these emerging markets. And that is, as I mentioned before, looking at how we stack or bundle these multiple asset classes on the same land area so that we can demonstrate additionality. At the moment, everything seems to be about carbon, yet the pricing's too low to enable it to be a standalone creation and long-term management facility. So we've really got to address that. And we get people coming to us to say, we want to do carbon, but it doesn't seem very tangible to us. Can we put some biodiversity in that? And that's, I think, the way it will go. So we need to satisfy the carbon demand with a more tangible biodiversity outcome, in my view. Speed up natural capital disclosure, as I've said, that's something government could do literally next week. And have robust governance to give market certainty whilst not making perfect the enemy of the good. So what we do as ecologists is we faff around a lot worrying about metrics and making sure they're 100% correct, whereas actually if they were 90% correct, we'd get the thing moving much more quickly. But that's the sort of academic side of how we treat this. It's not academic. For my passion is getting things out there on the ground. And if we've got 10% of it wrong, I don't really care. I think 90% is good enough. And there's a little plug about us. So you know where we are. And thank you, Sue.
Brilliant. Brilliant. Thank you very much, David. That was absolutely fantastic. And that last slide, I think, emphasises the importance of seeing carbon and nature investments in tandem, because I think we all know, we're all seeing really clearly the risks if we focus on either carbon or nature, and the unintended consequences for the reality on the ground if we're not really joined up in our thinking. So that was brilliant, thank you. Kelvin, may we please hear from Rich Fitton next?
Hi there, I'm Richard Fitton. I'm Associate Director at Finance Earth. Apologies I can't be with you today, either in person or virtually, but my colleague and the co-founder of Finance Earth, Jamie Mansfield, should hopefully be with you in the Q&A to answer any of your questions.
He won't be.
So I'm just going to give you a bit of background to Finance Earth and myself and what we're doing in the natural capital space, and give some thoughts around natural capital investment markets. So Finance Earth is a social enterprise. We're an environmental impact investment advisor. We are employee owned, and we reinvest 51% of our profits into our mission, which is to use market-based approaches to restore nature. We've got two sides of the business. So we have an advisory side where we work with the leading environmental NGOs, both domestically and increasingly globally, as well as public sector bodies and more and more often now private companies around how can we use finance as a tool to deliver environmental objectives. And we're also a fund manager, so we're FCA regulated. Means we can design, set up, and indeed manage impact funds. So those are financing vehicles that generate, alongside financial returns, they deliver social and environmental outcomes. So we've got 50 million under management at the moment, and that learning we get from that side of the business can often feed into our advisory side, because what we typically try and do with our clients is set up funds because they can allow us to get to the scale that can start to attract institutional investment into natural capital projects. So my background is I'm a chartered accountant. I qualified back in 2010, spent the following 10 years in corporate finance, so mergers and acquisitions and capital markets before like the rest of my colleagues at Finance Earth, and there's 20 of us now, all sort of left the city, left the mainstream financial sector to do something a bit more positive with our skill sets and actually more creative and rewarding. So in the agricultural space, we're pretty busy, as you can imagine. We working on a lot of nature-based solution projects. So how can we design financing mechanisms that unlock investment into things like constructed wetlands, things like sustainable drainage systems, SUDs. We're doing a lot of work in the peatland restoration sector, working with the peatland code, and increasingly active in biodiversity net gain, advising a few of our clients on how we can access investments ahead of the national market that's going to come in a couple of years' time. And we're quite busy in also in I've looked at the farm assurance standards world, so business models around standards that apply to agricultural management techniques that are nature friendly, but also allow farmers to access premiums for their products. It's an area that's increasingly interesting, and I think now brands and retailers are realising that consumers care more and more about where the food comes from and how it's made. So it's a pretty exciting area. And I've been asked today to speak a little bit about what we can learn from carbon markets to help us understand how to establish working natural capital markets in other areas. So I think it's probably worth reflecting that currently probably the most advanced natural capital markets are woodland carbon and upland peatland, because we have working standards in those areas, albeit quite limited, and the markets themselves still need to grow and scale. But it's very helpful to have those standards there, and so one piece of advice would be apply more and more standards into other areas beyond just woodland and peatland. So extend the peatland code to lowland peatland areas. We need to establish carbon standards beyond those two. So looking at salt marsh, looking at other areas, blue carbon, looking at soil carbon. A lot of people are working on that at the moment, and it's an area that we're quite involved in the development of. But those standards do need to be science-based. They need to be credible. They need to respect things like quality assurance and additionality and permanence, but it also needs to be flexible and easy to use. We ought to be and attached to those standards, there need to be registries, and ideally need to be housed in an independent organisation. So we have the ICN is a good one with the Peatland Code. So there's a bit of work to do there. Alongside standards, I would say I guess a more coordinated approach to public support I think would be helpful, and I think public sector investment and support is essential to catalyse the growth of these markets. So we have the National Environment Investment Readiness Fund, but we need more of that kind of support that enables project developers on the ground to build projects that actually can deliver financial returns alongside impact. Because what we're finding is it's really not the supply of capital is the issue. It's the supply of projects that are investment ready, and alongside that kind of support, we need more public investment that's willing to go in alongside and actually crowd in private finance into those projects that do reach that investment readiness stage. And other government mechanisms such as guarantees. So we've seen it in the woodland market with the woodland carbon guarantee. We need more of that and apply it beyond just woodland creation into other landscapes. Would be very, very helpful. I think also there probably needs to be some more guidance for landowners really around how future, or actually increasingly current schemes like ELMS that is coming in will work alongside the emerging biodiversity net gain system and existing carbon standards, so landowners can really understand what the implications of their decisions are and what the real potential is for revenue generation on their land. I guess the last thing I'd say is around water companies. I think water companies can play a big role in catalysing the development of these markets. A lot of projects that deliver natural flood management outcomes and water quality outcomes also deliver biodiversity outcomes, and they can also deliver social outcomes. And so it's really important to get more sort of collaborative approaches with water companies and local authorities and environmental NGOs and communities. I think the way that the water sector is regulated isn't always conducive to that kind of investment and that kind of collaborative approach. And there are some water companies that are ahead of the game. The others need to catch up, and I think the sector would benefit from some kind of reform, and potentially even sort of a more integrated approach to catchment management, which would encourage more investment and more of these approaches. And I think those. Getting those kind of schemes up and running will help catalyse the development of these markets. I've already gone over time, so apologies for that. Hopefully that was helpful. I hope you have a great show, and hopefully I'll be able to catch up with some of you in the future. Thanks a lot.
Thank you, Rich. And he reiterated, didn't he, that phrase that we hear so often, it's not for want of finance, it's for want of investable projects. So I'm sure we'll have a little chat about this towards the end. Now, back in the room, we have Tom Stratton, who is working on the ground with his tenants in the Duchy. So, Tom, over to you.
Brilliant. Thanks, Sue. Great to be here. It's the first time I've been at Groundswell. It's a fantastic event. I hope you're all enjoying it. I'm just going to give you a little bit of background on the Duchy, if I may, so you've got some context, details of the rationale behind our work on natural capital, its practical application, and then some of the learning that's coming from that to date. Hopefully this will work. So the Duchy was founded in 1337. As some of you will know, it exists to provide an income to the heir to the throne. We've got just over 131,000 acres of land across 23 counties in England. Over half of that is upland, with just under 69,000 acres on Dartmoor, where I'm based. And we've got 200 tenanted farms. Most of those farms will be medium-sized, mixed farms, some focusing on livestock only, such as Dartmoor. So about 3 years ago, we embraced the subject of natural capital. We set up a small internal working group to discuss it. It was a new term at that time. And what led from our discussion was what is now a natural capital project focusing at farm level on implementing environmental plans, and those are going to be developed across each of our 200 holdings. There were three real drivers behind it. Firstly, we wanted to get a better understanding on the extent and the condition of the estate's natural resources. We've been doing a lot of work over many, many years, much of which has been inspired by the current Duke to improve the environmental status quo. But we didn't have a proper strategic handle on what we had and where it was. So that was the first driver. The second one is, of course, the fast-moving changes to land management policy. We wanted to position our tenants as best we could for those emerging changes. And thirdly, David's already mentioned this driver that rightly exists to encourage the corporate world to become better at accounting, not only financially, but for its social and environmental footprint. And that's something His Royal Highness the Prince of Wales has been passionately campaigning on. And the Duchy itself is just entering year 4 of a fully integrated system of reporting. So to do that effectively, you need that strategic handle on what you've got and what you're doing to manage it to better effect. And ultimately, we want economically and environmentally resilient farm businesses. So in terms of the natural capital projects I mentioned, this is a farm-level project. We see soil as the absolute foundation to this, and we've already heard a lot this morning on soil and its importance. So we've got a small team of internal soil advisors which are working with our tenants, and they've come on board relatively recently, literally in the last year. So we're developing soil management plans for each of the Duchy farms, and linked to those, we're looking at whole farm carbon plans. We've partnered with a team based at Duchy College in Cornwall, who've developed the farm carbon cutting toolkit. So each of our tenants will have access to that resource. And I think it's fair to say that's a work in progress. We certainly need to Dartmoor-fy it, dare I say. There are quirks depending on the farm system. So we need to understand what we're measuring and how we're measuring it. And I think that's going to become of increasing importance at a national level. The plans that we're developing start with a baseline assessment. So we've got 2 ecologists, soon to become 4, working with the tenants and the land agency teams to look at what we've got now and its condition, focusing on the 5 themes of biodiversity, water, soil, landscape and public access. What have we got? What could be enhanced? And what indeed could we create in terms of new features? Things such as new woodlands, buffer strips, scrubby corridors, etc. These plans aren't compulsory for our tenants, but we are, I think, particularly linked with the Elms driver, getting a really good level of tenant engagement, which is fantastic. It's also drawing us even closer to our tenants, and it's giving us a chance to look at a shared sense of direction for the farm, putting aside, at least for the moment, the agri-environment scheme that may exist, and just thinking afresh. Where we move to an agreed plan for a particular farm, we're documenting the actions that each party, whether it's the Duchy or the tenant, have agreed to take via MOU. So that sits alongside the tenancy, and we can adapt that, change it as needs require. We're finding really, really significant opportunities, even within the more extensive land holdings like Dartmoor and Bodmin. And typically, sort of 10 to 12% of most farms will be able to help deliver some form of natural capital enhancement without actually affecting the productive capacity of that individual unit. So both at a farm level and then collectively over a landscape level, in areas, again, use Dartmoor as a good example, 21 contiguous farms and 19,000 acres of enclosed farmland, massive opportunities to create natural capital change. we wanted to really find a practical way of testing the delivery of these plans. It's all very well sitting in rooms talking about how marvellous they are, but do they work? What do they cost to deliver? Are they realistic? So in the last few months, we started to create 8 focus farms. So these are seeing as believing platforms into which we can invite our tenants and other partners. These plans don't translate very well, I'm afraid, onto slides, but there's a baseline plan there for a lowland farm showing existing field margins in yellow. There's some woods in green. And then that's a potential plan showing a number of new woods, buffer strips, new ponds, scrubby corridors, and these are all derived from a new digital mapping system which we've put together. And behind these plans sit a range of management KPIs, so we can record our delivery towards improvement and link that back to our system of integrated reporting. Funding, a really, really important subject. I think we're challenged at the moment as landowners and farmers because we can see what I call the capital ambition, particularly for peat and trees, but we've got less sight of the revenue flows, particularly with elms. So the focus farms are going to look at the economic aspects of delivery. We formed a partnership with Anderson's Farm Business Consultants, and we've just finished the drafting of a natural capital accounting model. So it looks at 2 things. Firstly, what does it cost to hold the environmental line? What does the farm business look like without the current HLS and BPS? And what gap do we have to fill to say, hold that line? And then secondly, what does it cost to develop our natural capital vision? And I think this is going to be a really important and interesting piece of work, both for us, our tenants, and we hope DEFRA and other partners with whom we're working to help inform the ELMS process, and indeed the market for the corporate finance. Whilst I think many of us would like to see a move away from profit for gone, assessing your cost of delivery as a starting point and gives what I would describe as a floor in the value, and then we can look at the willingness to pay side that perhaps the corporate market is more able to assist with, and try and find the balance of the 2. We're lucky to have a huge amount of support for this work from His Royal Highness. Our staff team is really committed to working with our tenants to make the best of this period of change. I think there's a lot of opportunities, a lot of benefits that can flow from this. So we've got some cash, in short, to get these ideas pump primed, and we're trying to leave each of our feedback sessions with our tenants with a couple of even small, tangible things we can do to get these ideas moving, get the tenants inspired. But we're not naive enough to think we can go it alone. We certainly can't, and ELMS is going to be absolutely critical. We're now at a process of getting several agreed plans documented with tenants, and we're drawing out the areas of potential action and considering how we can, both at a farm and estate or landscape level, unlock sources of finance, particularly from the corporate sector. I think whilst that marketplace is fairly immature, there are some great opportunities, and it seems from what I've heard this morning, both on some of the stands and through these presentations, that there's almost more of an issue linking the financier with the project deliverer together. So I'm sure that we can perhaps help. In terms of the learning, this work is in its infancy. We've only been developing farm plans over the last 18 months or so. And of course, with COVID, we've been restricted in our ability to get out and see people. So we want to push the accelerator on this area of work. But certainly the learning that's coming from the exercise to date is that both ourselves and the tenants are feeling empowered to have this opportunity to just look afresh at the farm, to think about what features they've got and what they can do in the future. the opportunity to be prepared in the short term to unlock these funding opportunities. And as I mentioned earlier, this opportunity to sit down as landlord and tenant and think about what the future could look like. How can we work together to best effect? Are there any barriers? The provisions of many standard tenancies aren't always helpful, and the landlord does ultimately, we accept, hold many of the levers of change that the tenant will need increasing access to if they're going to play to these new markets. There's an increasingly strong consumer awareness in the environment, in animal welfare, which is brilliant. I mean, we've seen some of that shine through the negative that has been the last 12 months with COVID. There's going to be an increasing market advantage, I think, to having this positive backstory of environmental management and delivery. And we've already got examples of that both within the Duchy and beyond. And one such example is the Dartmoor Farmers Association, which we helped to establish 12 years ago, selling beef and lamb direct to the consumer. 30 strong cooperative of farmers, quickly quite moving to 50. 3 years ago, we were able to introduce them to Morrison's supermarket, and we started to trial the supply of hill lambs, which we did into 10 stores, about 1,500 lambs, very much promoting the story of the extensive system of farming that produces them, the relationship between the delivery of the national park and all that goes with that. So they're branded accordingly, and they're accepted as lightweight hill lambs. And that project, over the last 3 years, expanded to 10,000 lambs, going into 52 Morrison stores. And Morrison's, as some of you may know, have been one of the front runners on carbon in particular, with a pledge to go net zero by 2030. So they're now starting a project with Dartmoor farmers looking at soil carbon and wider natural capital work. And that within the short term, they say, as short as maybe the next 18 months, is going to help them inform their move towards net zero and very much become part of their product marketing. So we can deliver. I think there's a huge amount of understandable fear at the moment about what the future is going to look like. But I suppose I wanted to conclude on a positive note that we can, as I say, we can deliver. We can work at scale, and I think farmers are really innovative and committed, to the long term. So if they know what they're able to do, what the payment structure looks like, I do feel people will commit, and we can deliver change at scale and at pace if we have the right backing. We can work collaboratively. There are some really good examples, but we probably need to be better at doing that and sharing our experience through events like this. I think that the farming and landowning community has so many of the solutions to the problems that we face, and if we can be confident in the face of this challenge, work together, stimulate these new markets, I would hope there will be an alignment and we can have a positive and strong future. So I hope you've found that of some interest and that you enjoy the rest of your day.
Thank you. Thank you, Tom. Really lovely illustrations of what it takes to effect change really practically on the ground. And also, I really like the way that you were describing how you work with all of your tenants who come with a range of readiness to change, let's put it that way. So this isn't just about working with the early adopters, this is about making sure all of your tenants can be equitable beneficiaries of what's about to happen. So I think there's a lot to learn from that. Right, we're going to finish up with a short piece from, if you like, the other pillar in this conversation. We've been talking about private finance, private equity. We've been talking about the practical challenges on the ground. But of course, the policy space is critical to this. Everybody's identified the need for government to create the right conditions for this to line up, to join up really effectively. So we're going to hear a short piece now from Helen Edmondson, who is a DEFRA director looking at green finance and how that works. So Kelvin, are you ready for Helen's short piece?
Good afternoon, everybody. Apologies I can't be there with you today. Fingers crossed the IT works later and I'll see you all via a Zoom link for the Q&A session. In the meantime, Sue has asked me to talk to you about my thoughts on the evolution of the natural capital market here in the UK, its role in supporting our ambitions around net zero, nature recovery, how we do that in a just transition, and in a way that where we can continue to feed the country. So a few objectives and a few challenges in there. I think it's also worth just reflecting that actually in the UK at the moment that natural capital market is still at its relatively early stage, although there are pockets that are developing more quickly, and I'll touch on that a bit this afternoon. So 5 things really that I wanted to flag. The first is if we are to kickstart these natural capital markets, we need to be able to say that we have a high ambition and really set that market signal. And we in the UK definitely do have that high ambition. We've set it out with our net zero legislation. We have a landmark environment bill going through Parliament at the moment with several ambitious measures within that. You will have heard our Secretary of State speak just a few weeks ago on the introduction of species targets for 2030. And alongside these legislative measures, you will have seen announcements around the UK's first ever green bond, and obviously our leadership with COP26 happening later this year. And you as a sector also, I know, have high ambition and welcome your 2035 voluntary net zero target within that as well. So if we want to kickstart those natural capital markets, we need to have high ambition, and I think across the piece we have that. Second point then, if we have that high ambition, this is going to require significant upfront investment, and that upfront investment is going to have to come from both public and private sources. At the moment, the public sector plays a significant role within that and will continue to play a role, but we should also be looking to the private sector to step up and provide more finance, more investment, working in partnership with us so we can go on this journey together. So then my third point, if we've got ambition and we recognise we need high upfront investment, we need those environmental markets to come on that journey with us. We already have, for example, a functioning voluntary carbon market through the Woodland Carbon Code, for example. And we also have biodiversity credits. It's great that we've got David on the panel today, who will hopefully be talking to you all about the work that he's doing with the Environment Bank. And there are other markets that are developing but are still relatively nascent. We are working with the Nature Finance Coalition, spearheaded by the Broadway Initiative, the Green Finance Institute, and also Finance Earth. Great to have Rich on the panel as well. And I know that the CLA and the NFU are actively engaged in that dialogue and supporting their thinking about what certainty is needed to ensure that these markets have high environmental integrity, but are also providing that financial integrity so that those revenue flows for those natural assets are clear, are certain, and are providing assurances across the piece. So we need markets, but we also need upfront capital, which is my fourth point I wanted to make. How do we really support that investment market? Flow into those landscape scale projects, whether that be through debt, whether that be through equity, or indeed through some guarantee mechanisms. And we in DEFRA announced our Natural Environment Investment Readiness Fund earlier this year, currently reviewing the applications at the moment and hope to be making announcements in due course. Really trying to bring together that landscape approach about how we can get investable opportunities. We are also working on an impact fund where we will truly be looking at a blended finance approach to how we can provide those assurances and take on board risks with the private sector hand in hand to get that capital flowing for that green and just transition. Which brings me to my fifth point, which is really about capacity and supporting those landowners on the ground. Make sense of this, what must feel, I should imagine, is quite a complicated landscape. How do they access the funds that they need, and what are the opportunities for them? How are we delivering on our environmental agenda hand in hand? And I'm looking forward to hearing Tom's thoughts in the Q&A session about the projects that he's put in place and how he's moving forward on this as well. As I said, this is very much a partnership and a dialogue. I'm looking forward to taking that forward with you all this afternoon. Thank you.
Brilliant. Thank you, Helen. And unfortunately, we can't bring in Rich or Helen for the Q&A session because technology. But I thought that was a really lovely, clear and straightforward explanation of how DEFRA is understanding the range of issues involved. So, that was a really, really encouraging piece. Okay, so as I said at the start, we're going to do some Q&As now with the panellists at the front, but we've also got a whole bunch of experts, I know, sitting in the audience. So as we start exploring some questions, I'm going to point my pointy finger at a couple of folk and invite them to offer some of their own responses to how they are already starting to tackle the challenges that we are describing here. But I'm going to start off, chair's privilege, with my own question, which picks up the point that I made in response to Rich's. What does it take to create the investable project that finance can support? David?
You're going to Tom for that one. Well, it's something, I think it's around clarity. So you've got to have something that the market wants to buy. And that's why, excuse me, sort of regulatory legal compliance is critical, because it drives it, really. I mean, I think if you look at the biodiversity net gain piece, that's been around in a voluntary capacity for a long while. And all we've had is a mixed bag of not very interesting things, really, under a voluntary regime that the planning authorities are supposedly enforcing but never do. With a regulatory mandated regime, basically that is it. You've just got to get on and do it. So it sets the developer the task of he has got to deliver a minimum 10% biodiversity net gain before he can get planning permission. And so what we do there is we set up these large-scale things and sell credits to multiple developers. And it's actually quite easy for the landowner in our model to get involved. It's actually quite a complex process for us, but we've sort of sussed that out. But the real compliance market is critical. And that's why I still think that natural capital, that we need corporates to really have to comply with some form of business to operate mandate. And then once you've got that, it really it works very easily.
Brilliant, thank you. Now, I know there's somebody in the audience who's also thinking about this question. Richard, actually, you're going to come and have the mic off me. Just tell us a little bit about what you're doing to help create those investable products.
Thanks, Sue. I think for all of us in here, certainly anybody who's a farmer, the world is going to become a whole lot more complicated for you. Farming has become a pretty simple activity in my mind. People looked after livestock, or they were involved in environmental stewardship, or they perhaps grew some crops. The interesting thing for me at the moment is that we have many more opportunities to perhaps attract new income streams, and that's really exciting, and it's a great opportunity. But we need to remember that this is a complete dynamic market. So we're farming already with more volatility than we have hitherto experienced. More difficult weather conditions, more access to global markets, more commodity price volatility, weather, and all that kind of stuff. And now we're going to add into that potentially biodiversity, net gain, carbon trading, and of course we need to remember that all those markets potentially move independently of each other. Now that's really exciting, but the reality is that we've all been used to receiving a basic payment, and that has, to a degree, buffered what we've been doing. If we remove our basic payment, those decisions that we're going to make with all those new areas of activity, they need to be really, really well-informed decisions. And so in that sense, it may well be that a farmer decides he wants to be, let's say, have a better carbon sequestration and get to a net zero position. But he or she really needs to know the impact of that, and also the impact of it in a changing market. I hardly ever put anything on Twitter, and most recently I remember putting something on Twitter about, will wheat at £180 a tonne mean that we stop developing our farming systems? And historically that has happened in farming. Those of you who remember 18% set aside, and those of you who remember what I call tick box environmentalism, which was ELS, will remember only those things were put in place because of the price of commodities. So what I'd like to do is to try and find a way for farmers to recognise the impact of their decisions, But the impact of those decisions, there's not one answer. I mean, there's so many. I mean, every one of you in here will have a different answer. But for me, it's about the data and the measurement of the decisions that you might all take.
Thank you, Richard. Now questions. Questions from the floor. Right, I'm going to throw these. Oh, didn't have to throw very far.
Hello, thank you very much. My name's Cindy. My husband and I have just co-funded a report about regenerative agroecology and how to finance it, a just transition. And it's funny, we use the word just, but it hasn't actually been explained here, really, how on earth the small farmer is going to manage within this environment, because it's much more attractive for any finance to go for something very simple. So the projects I see being fundable are the vast agroforestry projects, for example. And so, you know, we have a small farm. We'd love to transition. I look at those incredible maps that you've drawn and I think, oh, how do I actually get there? I mean, it's quite... And also, for people who don't own land, how do they get access? There is no finance, there's no banking that will lend to people to buy small holdings, for example. So how does this not just favour agribusiness transitioning and taking over, essentially, the landscape?
Well, I'm going to sneak in, again, Chair's privilege, and answer that second part of your question. One of the recommendations from the Food Farming Countryside Commission was for an agroecology development bank, which would create mission and purpose-led finance for precisely those sorts of projects that are not easily funded through conventional means. And you know, our research demonstrated that there is a substantial need for that. And we've had some really positive responses to that. So I'm hopeful, and I'm certainly hopeful, that the Infrastructure Investment Bank, with its focus on nature, may well be open to thinking about an agroecology-focused fund. But you're right to ask the question. I think this is, if you like, the purpose of this conversation today. How do we make this a just transition? How do we make sure that all scales, all types of enterprises, and we've heard about the tenant farmer position too, how do we make sure that everybody can benefit equitably? Because that has a knock-on effect for our rural economies and our rural communities. You know, it's great that hedge funds want to come in and support environmental benefits, but they're not rocking up, you know, at the PTA, they're not in the local shops, they're not in the local pubs, they're not keeping rural communities alive and thriving. And we also have to keep that in mind too. Any other thoughts on that on the panel? Tom?
Well, I need to say that I totally empathise with that challenge, and I think I'm probably going to go back to my point about the benefits of collaboration. You know, not possible for everybody, but there's a lot more that could be done out there. And one of the sort of privileged parts of my job is actually to help form sort of linkages between, you know, people and ideas, and to a degree sort of funding. So I've seen a lot of, you know, positive things come out of periods of challenge. So can't provide a silver bullet as such, but I think we just have to look as outside the box as we can, and see what we can do, you know, in that respect.
Yeah, excellent.
I wonder whether you've identified here quite an interesting angle, which could actually be that somewhere within DEFRA there sits a team that can help smaller scale operators to actually do it, because it wouldn't cost very much and it would actually pull in private finance. That'd be a great thing to do,
well,
and divert some
list
of the things that they're probably doing at the moment into those sorts of activities. Would be great. Yeah.
Brilliant. Cindy, can you pass the right behind you? Hal. Oh, yeah. Well, is it in response to that question? Yeah. Yeah. Go on, and then Hal.
Sorry, just very quickly, I was desperate to answer the question. In the past, I mean, some of you know my background, I've run some large farming businesses, and those businesses existed because of an analog existence. So what it meant was you needed a massive amount of consolidation to link up customers with suppliers. In a digital world, that opportunity for smaller producers is much more exciting and much more accessible, because the idea of connecting everybody together is really, really important there. So intermediaries that consolidate things, that make things more attractive, works in a is necessary in an analog world. In a digital world, it's really open to everybody, I think.
Yeah, hi. Howell Morgan, upland beef and sheep, an environmental farmer from Brecon Beacons in Wales. At the moment, our area is under threat from corporations and individual city investors buying up large chunks of upland farms to plant trees and offset carbon. British Airways is one of them, that's locally. They should be our, work with us rather than our competitors. What can we do as farmers to prevent this large amounts of farms being bought up by our competitors? There's land coming for sale next to me soon, and it's destined for tree planting with conifers, and it's full of biodiversity. I love to do a project on it, but I'm outpriced from these city investors. So how do we go about that?
Excellent, brilliant question.
Yeah, I totally sympathise with that, and we've been trying to work with a different hat on in relation to the right tree in the right place, because there's all sorts of scary things. We have it in the uplands of England where I am, and where horrendous coniferous plantations are going to be put on areas where curlew nest, for example. How ridiculous is that? So really, again, I'm sorry to keep deflecting things to DEFRA, but surely there should be some sort of impact assessment achieved, and then those projects cannot go ahead if they have impacts on existing biodiversity value. Simple as that. And then, of course, you're then down to the fact that they can afford to buy out these farms and are doing so. A very similar things happening many of you probably know, in the Solent region, and that's going to spread everywhere else soon in relation to nutrient neutrality. So where housing schemes can't demonstrate that they're being nutrient neutral, they have to do something to offset the nutrients. So we and others are looking at how we'd trade nutrients, but at the moment, some of the large house builders are actually buying tracts of farmland. And of course, they've got pretty much endless supply at 23% profitability on housing schemes. They can afford to do it. And there needs to be a better way for them to achieve that without having to buy a land and then just not do anything with it. So I do sympathise, and I think that it is all to do with having pretty strict impact assessments on that tree planting regime, which we are doing in the north, I think, of England, but it is a real challenge. But we've got to press for it. And we have had situations working with the Forestry Commission where we've said, there is no way you can actually have tree planting here because of the breeding waders population that you've got there already.
Thanks, David. We've got a minute. Tom, did you want to respond?
Well, I need to empathise with that point, and one of my little side projects at the moment is working on a national curlew recovery project. So, as David said, one of the ironies at the moment is the driver to plant trees is resulting, or at risk of resulting, in the loss of some of the key curlew habitat. So I had a VC with the curlew partners and the Forestry Commission about a month ago, and they are developing a sensitivity map for curlew, but it sounds to me like that maybe needs some expanding out to deal with some of these other wider economic challenges. From my questioning to the FC, they don't seem to be intending to attach any particular focus on strategically encouraging the sites for these woodlands. They're letting the market dictate, but I think certainly the farmers that I deal with are really quite concerned about some of the adverse consequences of the net gain market, to the extent that at the moment, admittedly cushioned by the existing support system, many of them wouldn't actually want to take net gain money on moral grounds, which is really interesting. So yeah, I just think we need to probably collectively look at that whole area and make sure that there aren't unintended consequences attached to what at face value looks to be a good solution to the impact of development.
Yeah, brilliant. Thank you, Tom. And for what it's worth, I am also a Welsh farmer, even though I don't sound like it, and absolutely share the anxiety that the unintended consequence of the pressures that we've been hearing about today could be really, really serious. And we spoke a little bit earlier, didn't we, about the work that we're doing as a commission with Welsh Government and with the Development Bank of Wales to make sure that, one aspiration of government is not undermined by activity over here. So we'll keep in conversation about this. That's all we've got time for, folks. That's gone really, really quickly. I thought we'd have loads of time to ask loads of questions, but I think the thing that I'm taking away from this, yet again, actually, it's a theme of this whole conference, is that when we're working together, when we're aligning our interests and efforts, we're creating that critical mass for change, joined up voices, joined up effort, and it's that joining up that makes government more confident that they are doing the right thing and supporting the right thing. So thank you for listening. Please do stay in touch with any other questions, any other contributions, and any other ideas. Thanks.